So good afternoon, everyone. Welcome back to our weekly webinar series. Anil sir is traveling today, and therefore we are taking this session in his absence. Uh, I'm Ankit Goyal, insolvency professional, partner of Triple Insolvency, and I think most of you would already know me. I have with me our partner Nitin Jainji, who is also an insolvency professional, and we are today taking up a topic which is very, very important for all insolvency professionals. Not only about, we are going to discuss about GST and its correlation implications with IBC. One of the discussions that is also very important and which we will take up today is that what is the relevant law available or is in GST, which also impacts perhaps the relationship between IBC and GST in light of the recent sales tax officer judgment from the Supreme Court of India. So without wasting any further time, let me share my screen and start discussing how these two acts are very, very important, very have a lot of linkages. We will also talk about the compliances that are required from the insolvency professionals with respect to the various CIRP cases, etc., that arise that where they are insolvency professionals or liquidators. So two groundbreaking reforms happened almost at the same time. The IBC, of course, came in 2016. December 2016 is when it was mostly notified. Goods and service tax, we all know, came into effect from 1st July 2017, and most of the rules and most of the regulations came into place at the same time. Both these reforms have been path-breaking, whereas IBC has changed the entire stressed asset management, especially for large assets in India, and given a breakthrough for banks and financial institutions to recover debt from large companies or running companies, also assisted in giving a mechanism which takes into account all the stakeholders who can then decide on how to restructure the company and save the jobs and save the business. That is what we were looking at. GST, on the other side, has, of course, simplified the indirect tax regime in India, has made it technology oriented, given a lot of information now to the government. The idea is to, of course, make it simple to comply with laws and at the same time use technology to catch offenders. So IBC consolidates all frameworks related to insolvency under one law. Of course, previously there was it has provided a clear, coherent, and speedy process for early identification of default and financial stress. The court has given both the directors and debtors the power to initiate proceedings, historic jump in the ease of doing business, and of course, time-bound manner of resolution. All these were features of IBC. GST, of course, as we said, replaced multiple laws, comprehensive, multi-stage, technology-based, and basically the collection, the kind of information now which is getting collected in GST is mind-blowing with respect to how much information the GST department has with respect to the compliances of various assessees. And we will discuss more about that further. So GST is applicable as per IBC as soon as a company fails to make a payment of more than 1 crore rupees. Of course, it can be taken into insolvency. There were various issues when IBC came in because IBC and GST had certain conflicts. The conflicts were that in case a company went into insolvency and let's say that that company has defaulted in complying with certain GST related regimes, certain GST related compliances, there was a difficulty in filing GST return because how the GST system works is that in case, say, you have not filed the return for August 2020, then maybe you will not be able to file the return for September 2020. So because of this limitation, because of how the technology was developed for GST, it was becoming difficult for many companies under CIRP to comply with GST during the CIRP process. And that feedback was then taken up in the GST Council meeting in the 14th March 2020 meeting. And therefore, at the fag end of March 2020, there was a lot of many circulars came in which address these issues with respect to the GST versus IBC regime. Under the GST law, insolvency and receivership services are classified under section 9982 40, that's the heading. And the GST, of course, is taxable at 18% on all insolvency related services. So this is for all of us who are providing some services with respect to insolvency to any company. This is the heading under which GST is paid. Of course, whenever the company is liquidated and there are certain tangible assets that are sold by the liquidator on behalf of the company, GST again applies on that transaction and it is considered as supply of goods. We will discuss that further in detail on how sale of business as a going concern is exempt from GST or does not account for as a supply under GST law. And therefore, we are only required to pay GST on sale of goods or services. Services are mostly not sold during liquidation. So it will be some goods, some assets of the company, tangible assets of the company which are sold, and mostly immovable properties which are being sold under liquidation would be exempt from GST as they are completed land and building assets which do not have any implication under GST. So GST authorities can initiate CIRP to recover dues. Operational creditors can initiate CIRP process. CIRP can be initiated only on occurrence of default. And first step is to deliver a demand notice to the corporate debtor with evidences of payment due and default. Next step is to make sure that there is no dispute pending and no payment has been made by the corporate debtor. And after the expiry of 10 days from the delivery of demand notice, CIRP application can be filed by the GST department. In most cases where the GST authorities have some pendencies against a corporate debtor, there is normally a dispute that is raised, and this dispute is pending at some forum or the other. And therefore, in normal circumstances, the GST authorities are not able to use or initiate insolvency against the company. Maybe only in exceptional circumstances they are likely to do that. Another change that has happened recently in the GST regulations and how GST is working these days is that GST has become very stringent about compliances on the on a regular front. So basically, GST law says that number one, in case you have not filed your GST returns, your GST or 3B, and you have not filed your taxes, then the GST input will not be available to the recipient of services or goods. So that makes it very, very difficult for companies now to default on GST and not file their returns in time, because one of the inherent requirements of doing business is to allow availability of credit to your customers. In case that is not happening, then the business is anyways going down the hill. The second thing that has happened is that in case some company, some CD defaults in filing GST returns for 2 months, and that non-filing would happen naturally in case the company is not able to deposit GST. In that case, in that case, the GST authorities are these days very quick to cancel the registration. And in case the GST registration is cancelled, then again it limits the capacity of the business to do the capacity of the CD to do any business at all. Because in absence of a valid GST registration number, there would be hardly any customer who would be ready to buy goods from that customer, from that CD. So this is how GST authorities and how the GST authorities are managing their defaults. Yes, a lot of assessments are happening these days, lots of audits are happening these days, because since 2017, GST has now become stable. Earlier, there was a threshold that you could take some input which was not reflecting in your Form 2B is what they call it. Now that is not available. So there is a restriction on you to take GST input only based on what other people have given you as credit. Also, a lot of assessments are happening for the period since 2017 now. So all that is happening in GST these days. GST authorities can, of course, operational creditors may propose an interim resolution professional, and corporate debtor will have the option to make payment to CIRP. Payment from have the option to make payment to escape from CIRP, and provision can be used for final determination of outstanding demands and push those companies to liquidation which are not paying their taxes. Moratorium, whenever the moratorium steps in, we need to understand how it impacts the GST demands and GST related compliances. So during the insolvency regulation, insolvency process, start of fresh proceedings is prohibited against corporate debtor under section 14(1)(a). Continuation of pending proceedings is prohibited against corporate debtor. Execution of any judgment or order is prohibited under CIRP, and any action to recover any dues is prohibited. So the moratorium has an effect of giving relief to the company from any action taken by the GST authorities. During liquidation proceedings, starting fresh proceedings is prohibited against the CD. Continuation of pending proceedings is not prohibited. So any proceedings which are going on, the liquidator is supposed to manage that and address those proceedings. Liquidator will take into control and custody all assets of the corporate debtor, and any action to recover any dues is prohibited as claims would be filed by the creditors. The IRP/RP shall have the authority to access the books of accounts, records, and other relevant documents of corporate debtor available with government authorities, statutory auditors, accountants, and such other persons as may be specified. Take control and custody of any asset over which the corporate debtor has ownership rights, to file an application to NCLT and seek directions against any person who is not cooperating. Accessing the GST portal is a very, very important step for any IRP, any RP, because accessing the GST portal of the GST number that the company was operating will also give a lot of insight into the kind of transactions that the company was reporting on the GST portal, and the kind of input credit that was available to the company. So in many cases, we find that the books of accounts are not available, the CDs management is not cooperating. In those circumstances, digging out the income tax returns, digging out the Form 26AS, digging out AIS, TIS, which for the past few years, the GST returns for the past few years, the TDS returns for the past few years, can generate an alternative information which will then allow the RP or the IRP or the liquidator to ask the relevant questions to the CD's management, and basically that information will really help in establishing if there was any business which was being done in the name of the company, or what was the status of the company, were there any puff transactions in the last 2 years or 5 years, or fraudulent transactions in the last 5 years. So all these things become very, very important. A lot of information is available from these government portals, including the GST portal. Similar powers are given to the liquidator under liquidation process. All the assets of corporate debtor, if attached by the government authorities against the dues, would be released in favor of a resolution professional. However, if the assets are realized and adjusted against tax dues, the same is not required to be reversed. Shall be responsible for complying with the requirements under any law for the time being in force on behalf of the corporate debtor, and to comply with all the provisions during CIRP, that is the TCS, TDS, TCS payment of income tax, filing of returns. So yes, we agree, understand, and I think all the insolvency professionals understand that completing the compliances which are required to be done as per the law applicable to the CD during the CIRP period is extremely important, and that has to be taken care of. Filing of claim by GST authorities and their rights in CoC during CIRP. So Section 520 defines operational creditors, means a person to whom an operational creditor to operational debt is owed. When we see 521 and see operational debt being defined, we have an inclusion there which says that or a debt in respect of payment of dues arising under any law for the time being in force and payable to the central government, any state government, or any local authority. So therefore, operational debt includes any amounts payable to the government authorities, and therefore operational creditors is the status that is given to the government authorities when they have any dues outstanding against the company. So they would have to file their claim in Form B, and claim can only be filed for amount due from corporate debtor, irrespective of the appeal pending with any authority. So they will file the full claim that they have against the company as on the CIRP date. That is the requirement from operational creditors. Right of operational creditors to get notice of CoC meetings and to attend the meetings. So this would only happen in case the amount of their aggregate dues are not less than 10% of the total debt claims. Operational creditors will not have any right to vote in CoC meetings. In case there are no financial creditors as per Regulation 16, operational creditors will form the CoC, and 18 large OCs will form committee of creditors, and if the government dues are amounting to a rank where they are as a part of the 18 large operational creditors, they will also form part of the CoC meeting in that case. Government authorities would also file their claims during liquidation process in Form C, and that is how they will try and get their claims from the company. Verification of claims filed by GST authorities during CIRP cases, so proper form used or not. So this is how any insolvency professional, these are the steps or these are the processes that he should conduct to make sure that to verify the claims. So proper form should be used. Authority of the officer who is filing the claim and signing the claim documents should be ensured that he has proper authority. Certified copies of the assessment orders, appeal orders should be attached with the claim in case the claim is relying on those orders with respect to the demand raised by the department. Recovery certificate, if it is issued, then it should be attached. Disclosure of any appeal filed, relief given by any appeal order is affected or not. Information can be obtained from the corporate debtor. Any refund dues for different years are considered or not. In case CD has authentic information regarding some payments, adjustments, deletion of demand, or adjustment of refunds with the demand, the same can be considered before admitting the claim. And information provided by CD can be confronted to GST authorities, and claim can be admitted thereafter. Statute dues are operational creditors, and then of course we look at treatment of GST dues in resolution plan. So maybe I will request Nitin to take up these slides and also take up the judgment which we need to understand with respect to the state tax officer versus Rainbow Paper Mills Paper Limited. Just a second. So I'll just wait for Nitin to come back. In the meantime, I will take this forward. Statute dues are operational creditors. So this was Principal Director General of Income Tax versus Synergy Dure Automotive Limited, NCLAT judgment, held that Income Tax Department of the central government and the Sales Tax Department of the state government and local authority were entitled for dues arising out of the existing laws are operational creditors in the meaning of 520. We have also looked at the definition of operational creditors and operational debt, and I think this is a this opinion or this interpretation of law is final, that government authorities will remain operational creditors in the meaning of Section 520. Then we have a case which is Sales Tax Department, State of Maharashtra versus New Faltan Sugar Works Limited. It's an NCLAT judgment where the appellant is an operational creditor. Provisions of Maharashtra VAT 2002 creating first charge in its favor get eclipsed under the overriding effect of provisions of Insolvency and Bankruptcy Code. CoC approved resolution plan is beyond the pale of challenge before the AA or even before this appellate tribunal. So the first charge issue has now been, of course, raised at the Supreme Court level, and maybe I will ask Nitin to talk about this and also the judgment with respect to the Rainbow judgment.
Right, sure. Thank you, Ankit. So I think let's go to the judgment directly, and then we can address these issues. We can just move ahead on the judgment. So I think it's a very important judgment which has come in on 6th of September in this matter of sales tax versus Rainbow. So I'm going to first talk of the facts in the case, and then we'll figure out the repercussions of the judgment and what it means today. So I'm going to say the facts of the case. One is that the CIRP in this company was initiated on 12th of September 2017. So firstly is that there was the facts of the case is that there was a CIRP which was initiated on 12th September, and before the CIRP was initiated, in 2016, the VAT department, the Gujarat VAT department, had filed a recovery case on the rainbow matter for 47 crores. So this was done in 2016. And in 2017, the September, the CRP was initiated. Now, given that there is 30 days to file a claim, on 10th of October 2017, that was the last date of receipt of the claim post the public notice which was published after initiation of CRP. So that's in terms of the timelines. Also, uh, now it's important to note that in this 30-day period, the GVAT, Gujarat VAT, the state did not submit its claim. So the state submitted its claim on 28th of February 2018. To 28th of February 2018, they submitted their claim to the RP, and they submitted the claim for an amount of 47 crores. The RP, then a resolution plan was submitted, and a resolution plan, an amended resolution plan was approved by the CoC on 5th of June 2018. So I think it's important to note over here that the claim was submitted by VAT on 28th Feb 2018, and post that, an amended resolution plan was approved by CoC in June 2018. And then in October 2018, the RP informed the appellant, in this case GVAT, of a waiver of the claim, saying that, as per Section 53 or as per the resolution plan approved, there's a complete waiver of your claim, and, you will not get anything. So, then the appellant in this case, the GVAT filed an application in NCLT. So NCLT adjudicated the matter, and then on then adjudicated the matter, and then on 27th of Feb 2019, NCLT rejected this application, saying that there is a resolution plan which has been approved, and he's submitted a claim after 30 days, and they rejected this claim. So once this claim has been uh, rejected, they filed an appeal in NCLAT. NCLAT upheld the order of NCLT, and then they went to the Supreme Court. The as you what as the Supreme Court, I'll just talk of what the Supreme Court said. So the Supreme Court mentioned, I think, so the Supreme Court in this, I think we can move ahead.
Yeah, I'm just doing that. Just give me a second.
Facts of the
Yeah. So, of course, this is the provision, and then this is the decision that I think you're looking at.
Right. So the Supreme Court said that the regulations of IBC have to be read as a whole and is to be interpreted in the light of the statutory provisions of IBC. Okay. The amendment in Regulation 12. So there was an amendment in Regulation 12. What is that amendment? The amendment is that before 3rd of July 2018, the 12, the regulation said, the 12 to the regulation said, a creditor can shall submit claim, shall submit with shall submit proof on or before after the last date in the public announcement. Now, the amendment which happened is that they added the words claim with proof. So earlier it was that the claimant needs to just submit proof by this date. Then by 03/07/2018, it states that they had they had to submit a claim. So in this case, during the adjudication in the Supreme Court, it mentioned that this claim was filed before 03/07/2018. This thing happened in before 03/07 2018. So in this case, what it's clear is that even though they have started a recovery of the claim in 2016, the claim is being reflected in the balance sheet, and it is the responsibility of the RP in this case to verify the balance sheet and check, to review the balance sheet and check if if there are any claims which are missing, and he should have taken that claim. So, and there is a proof of the claim with respect to the recovery proceeding, which was initiated by GWAC in 2016. And also, the second fact over here is that, it's reflected in the balance sheet. So, the claim in this case may not have been filed. However, it's important to say the claim was still filed
Hmm.
on February 2018 before the resolution plan was approved. So, what the decision of the Supreme Court is in this matter is, I think we want to just go to the previous slide.
Yeah, yeah.
Yeah. So it said RP examiner. Okay, and we can go ahead. Sorry, we can go ahead. So then it's saying that, that the resolution plan has to be in conformity with the statutory provisions. And, as you're aware that an OC shall not be paid less than the amount to any such creditors in the event of liquidation of a corporate debtor. So, he says that the resolution plan,
Right.
which does not meet the requirement of IBC, would be invalid and not binding. So, in this case, the Supreme Court said that this is a secured creditor, and largely coming from the fact. Maybe we want to go to the next slide. Yeah. So he said that, it said that, that reading of section 330 and 331 of IBC makes it clear that the finding of NCLAT that the state is not a secured creditor is erroneous and contrary. So their view is, in view of the statutory charge in terms of section 48 of GWAC. So if you look at section 48 of VAT, of GWAC Act, Gujarat VAT Act, it states that,
So I will just go to section 48.
yeah, here it is. It states that the tax to be first charge on property, notwithstanding anything to the contrary contained in any law for the time being in force, any amount payable by a dealer or any other person on account of tax, interest, or penalty for which he is liable to pay to the government shall be the first charge on the property of such dealer, or as the case may be such person. So, as per the GWAC, it is saying that tax is to be the first charge. Now, the question is that, this was not considered both in the NCLT judgment order and also in the NCLAT order. And, there was not mentioned that, the IBC is going to override this under section 233.
Hmm.
So, and whether, IBC can override it, that's a bigger question, whether IBC can override this clause. So the basis this, the Supreme Court said that, GWAC Act is saying that that they have a first charge. So we cannot ignore that this is that they have a first charge, and therefore they were categorized as secured OC, secured operational creditor in this case by the decision of the Supreme Court. So it is saying over here that under section 53(1)(b)(2), the debts owed to a secured creditor, which would include the state under GWAC Act, are to rank equally with other specified debts, including debts on account of workmen dues for a period of 24 months preceding the liquidation commencement date. State is a secured creditor under GWAC. So section 330 of IBC defines secured creditor to mean a creditor to whom security interest is credited. So, as per the Supreme Court order, the security interest uh, by way of a regulation under GWAC Act, by default, the security interest is there under GWAC Act, and that by default, automatically, the RP would have to consider this as a security interest. So, uh, that's the judgment,
Yeah.
that's summary of the judgment which is there. And
So what is the what? So maybe you can add that what are the facts with respect to the attachment that was done as part of this. So because there is a view that uh, attaching the property before the moratorium starts by the tax authorities creates a difference. Does this judgment deal with that issue, or here
No, it
the
doesn't. It doesn't
it
deal.
doesn't?
Doesn't deal
So
with
the
that issue.
attachment here,
So
as we were
I
discussing,
just
yeah.
want to put again a fact
Mm.
of the case. The insolvency has started on 12th of September 2017,
Mm-hmm.
and the GWAC has attached the properties 1 year later on
Okay.
8th of October 2018.
Right.
They
Right.
have attached. They've sent an attachment order, and this is in contravention of the moratorium.
Mm.
But this is so. I don't think so. It deals with this. I think this deals with more in terms of what are the regulations which are there in GWAC, and also more extended. What are the regulations today? Which may rest in GST
Mm.
and other laws. You
So
know.
basically, the status of government authorities as secured or unsecured has been addressed primarily by the Supreme Court of India in this matter. Let's now, I think, briefly you can also take up how the GST provision talks about the same provisions, because
Yeah.
most of
Yeah.
us will be interested as insolvency professionals, as of course stakeholders in the whole insolvency regime, because VAT dues might be there, might not be there, but what does the GST law talk about this?
So I think it's important to note over here. Thanks. It's important to note over here that GST law has come very recently. So it's taken cognizance of IBC. So if you read Section 82, tax to be the first charge on property under GST Act, notwithstanding anything to the contrary contained in any law for the time being in force, save as otherwise provided in the Insolvency Bankruptcy Code 2016, any amount payable to a taxable person or any other person on account of tax, interest, or penalty, which he is liable to pay to the government, shall be first charged on the property of such taxable person or such person. So, the Section 82 of GST provision is probably giving an exception in cases which are under IBC, and is saying in those cases IBC code and regulations may be followed. And GWAC is much older. GWAC probably as an act was done much earlier. So I think, but GST is saying that. But I think we can talk of what are the repercussions, how do we see this law getting translated to cases today? Correct, Ankit?
Yes,
So
the question that is coming to my mind is, after reading this section of GST under GST law, is that it says save as otherwise provided in IBC. So first of all, this section 82 of GST law, of course, overrides all other laws which are there. Then it says that IBC law will not be overridden by this section 82. And if IBC provides for a certain mechanism with respect to tax to be the first charge on the property or charges on the property, then this section will not be applicable. But does IBC change the charges or the secured nature of the debt itself? In my opinion, the secured nature of the debt is determined based on the contracts that are already undertaken by the CD with various authorities and by operation of law with respect to maybe other dues. So, but we were discussing, as, and I think we should talk to everyone and discuss this and share our thought with everyone, that we were always under the belief that the tax authorities uh, um, are, and the government also at various instances used to say that the tax authorities will have chosen to uh, become last in the order of preference, and have now decided to give way to the survival of the company rather than being the first, or being the first claimant in the line of getting any amounts due. And when we, and sharing our experience from Surface, we used to say that in case there is an encumbrance on the asset from any bank, from any financial institution, there we used to say that yes, the first right over that encumbrance is the government's. And that was also due to a change in law where the order of the waterfall mechanism as determined under Surface was modified to make sure that the government dues are uh, below the dues to the uh, secured creditors. So now the position, of course, with the Supreme Court judgment has changed. And I think you will also, maybe you can share how the ASG and who was representing from the government, who and how the government's claims were addressed by the ASGs, and how, what was the representation for the Gujarat government and the central government there. So that, I think now there is a uh, confusion here, that, or rather there is a decision here, that if the law writes and law says that first charge will be there on property of the uh, assets of the CD, then almost every statutory due will become a secured creditor. And then in that case, maybe passing any resolution plan will be a difficult exercise. In case we say that this has nothing to do with attachment of properties and mere legal provisions, that there is a charge on the property for the tax dues, is enough proof, or enough to say that this is secured in nature.
Right, right. So I think very rightly said. I think the government, we went through this judgment in great detail, and what we see is that the government has taken this very seriously. The state has taken it very seriously, and it was argued by Mr. Tushar Mehta as the ASG, and also the additional ASG, the additional Mr. KM Natraj was also there. So they've taken it very seriously. It is a conscious decision of the government to classify defaults like this as secured claim. So I think it's important. Also, this, as Ankit was saying, and we believe is going to change the landscape of resolution plans currently being approved in the country. I think it'll be a question mark in terms of whether one can actually look at plans which have been already approved. But I'm talking of plans currently which are being approved, where currently what will happen over here is that the resolution, I also see there are certain issues like a lot of these GST claims are disputed in a lot of cases. All are not settled claims, and so the as a RP, you will we will have to verify the claims and take a decision on it, and and admit the claim accordingly, as the case may be. And and we'll see in one of the judgments over here where NCLT has said that RP cannot, in one of the cases the claimant had the GST department had put a large claim, and the RP had just submitted 1 crore, where the NCLT said that the RP doesn't have the authority to adjudicate a claim like this, and it has to go to the department so that they can adjudicate the claim. But there will be certain questions over here in terms of disputed claims which we were earlier handling also, and those claims were admitted. Now the only difference is that any of these claims which get admitted, and in cases specifically where they, after the amendment in 12.2, on after 3rd July 2018, where we see that CIRP has been initiated in those companies and they have admitted a claim. In those cases, I would say that they one would have to consider them as a secured creditor, secured OC. So if we are in the process of getting a resolution plan approved, it would require revisiting that process under this regulation, under this order today, Supreme Court order, which has come in. Also, when I look at the GST provision, honestly, I'm not very clear. Though it says that, save as otherwise provided in IBC, I thought the essence of this was that, the payment would happen as per Section 53 of IBC. But if this means that the GST will not have a first charge on property, that is a question mark in my head.
So
I
the
would
only
I would rather I would rather take
Mhm.
the safer route of accepting the
Mm.
Supreme Court judgment in this case. Yeah, Ankit.
So the next question is that IBC does not have any provision to convert any unsecured portion to secured or secured to unsecured. Or IBC is also rather there is already that case going on where Supreme Court has stayed the judgment of this Kotak Mahindra Bank versus this is judgment which is determining the way the distribution under liquidation should happen under Section 53 under the waterfall mechanism. And that judgment is something which presently we believe that the secured versus unsecured nature of any debt is also supposed to take into account the amount of that security. So in case, say, a company has a CD has 3 properties, 4 properties, maybe all 4 properties are mortgaged with banks, and all 4 properties, the mortgage value or the liquidation value of those properties is less than the amount due to the banks. Now, in that scenario, if we go by the present understanding of how the legal position is, all 4 banks will have a secured interest in those properties, and they are supposed to get the liquidation value of those 4 properties as the value under any plan if they are dissenting financial creditors.
Right. So you're talking about the Gujarat Olio one, correct?
Yeah, Gujarat Olio is one judgment. There is also this judgment which is Anil, which is one of the judgments
Anil
which is
Goel
in
versus, yeah,
yes,
yeah, yeah,
yes, yes, yes.
yeah. I know, but that is being stayed by the Supreme Court.
Yes, so the
Yeah,
stay by the Supreme Court is on the NCLAT judgment, which
correct,
reversed
correct,
the NCLT order, which NCLT order
correct,
said that you have to
correct.
take into consideration the
Right,
amount of security. You just can't say that if somebody is secured, then everyone comes at par.
correct.
Because in that scenario, a first charge, second charge, no charge, everything would become, or what is the charge on, would become a very, very difficult scenario to establish.
Right. No, no,
So
but
now,
I
so,
want to just interrupt
mm,
over here. I want to say over here, I think the law is very clear over here. They're not talking of second charge, first charge, unsecured. They're just talking of first charge.
yeah,
They're not talking of second charge. They're not talking of unsecured. So it's a very clear law today, which has come into place that they will have a first charge. So if they
right,
have a first charge, they are pari passu with the FCs
yeah,
or the other guys who have the first charge. So in this case, this is a Supreme Court order which has come in on 6th of September. It makes it very clear that in the waterfall after the insolvency liquidation cost, or during the CRP side after the CRP cost have been paid, these guys have to get the highest priority along with the workmen and workmen 24 months and the financial creditors. Correct. So I
yeah.
think that's how we look at this law. I'm sorry to interrupt, but you're saying something. I agree with you that there is some clarity which is going to be emerging from that side, both in terms of the of quantum of of the security interest, and also the nature of the security interest, exclusivity,
Yes.
multiple banking, consortium, pari passu, whatever it is, as a case may be, right?
So yes, so say let's take an example now. Say the dues to banks and secured financial creditors is say 100 crores, and the underlying assets, and the liquidation value of those underlying assets is, let's say, 50 crores. Now the next question is that if the GST department comes in and says that I have 100 crores due from the company, these are my orders, these are my assessment orders. Maybe some of these are disputed by the assessee, but this is my claim. And as per the present legal position, any RP who gets this claim has to admit the entire claim, even if the CoC chooses to fight those or continue fighting those assessments or those appeals and wait for their finality. But in that position, we would have 100 crores of uh, claims from the government with the first charge under the GST law or under some other law, and we would have again the financial creditors saying that we also have first charge. So then it will bring a lot of difficulty in any resolution plan being passed or cleared under the mechanism, so that the OC gets at least the liquidation value under Section 53. If the OC has first right over the liquidation value, first charge, then maybe there will be no resolution plan at all. So I think we need to wait on how things develop over this law, and maybe also at the same time continue discussing this judgment, which is again going to change a lot of things. So let's see, in case we have any further slides on this topic. If not, then what we can do is we can look at some questions. Yes, I think I will just see. So ML Kabir is saying, which law governs the security interest? Isn't it the SARFAESI Act and its laid down procedure for registration of charges? If first charge concept is brought in for government dues, all secured creditors turn to lose in such a situation. So Mr. Kabir, this is exactly what we are also saying. And I think it is up to the secured creditors of the financial system to stay alive, where first charge will have any meaning left. It is now dependent on how the financial creditors who do a lot of secured lending would like to protect their interest, and maybe seek a review of the Supreme Court judgment. But as per our understanding, as per the present position stated by Supreme Court, this is what we understand. We also need to understand, as we have said, that in case save as otherwise provided in the IBC code mentioned in GST law has any implication, because the legal position and the legal understanding is that whenever any section in any act says notwithstanding anything contained in any law, it logically overrides all laws which have been passed before the law came into force. And the only reason why save as otherwise provided in the IBC code is written here is that the intention of the government or was not perhaps to override the IBC when they wanted to create a situation where they wanted first charge over all the properties. But IBC in itself, as per our understanding, does not decide what is first charge, what is second charge. And that is also how the interpretation has been done by the Supreme Court in the judgment that we are talking about. So then we have GST law and GVAT. There is a question on what is the relationship between GST Act and GVAT. So my understanding is that when GST Act was enforced in 2017, GST Act brought into a new regime, which started on 1st July 2017. And the Act mostly says that all the earlier assessments, all the earlier demands, all the earlier issues under the various earlier acts will continue under the relevant acts. And those provisions of those acts will continue. However, the provisions with respect to levy of taxes from 1st July 2017 onwards will cease. So therefore, all the old dues that have been raised under GVAT, under sales tax, under service tax, sales tax, excise, they continue to be governed under the earlier acts, and the powers of those authorities continue to be valid with respect to enforcement of those rights. So therefore, in this case where GVAT dues were pending, the government of Gujarat was continuing to pursue the recovery of those demands under the provisions of that act itself. Then we have a question from Mr. Mato. He says there have been cases where claim is filed with the IRP liquidator without assessment order in place. So I believe now the position is clear that in case the assessment order is not in place, you can always revert to the claimant, make in writing the deficiency that you have noted in the claim and ask for correction of that claim. The proof of the claim or the amount is, of course, as we also discussed a while back, is mandatory. I don't think we can forget that. So let's let me just see. I think there was another relevant question here. GST registration we will discuss shortly. Whether GST dues are considered as secured under liquidation, this is what we have talked about now. And Mr. Sankar is talking about 26 AS not getting access. Today's topic is GST and IBC. However, I will still quickly say that 26S is available to any person who is able to log in into any CD's portal. And as an insolvency professional, you can log into your individual income tax portal and claim to be the authorized signatory of the company that you have been appointed insolvency professional for. All you need is the certified copy of the NCLT order to be attached with that application, and you get the full access to the income tax portal of the corporate debtor through your login credentials as an individual person. So that is possible. So let's continue. I think we have spent a good time on this provision. Now, quickly talking about insolvency during corporate insolvency regulation process, pending assessments during CIRP and in resolution plans. So the assessment proceedings can be resumed after the resolution plan is approved or liquidation order is passed. So far, the view was that wherever there is a demand coming in and the demand is appealed against by the company, it is the choice of the company to fight that demand or not, because the view was that if the demands survive, even then the dues will be last in priority under the waterfall mechanism. But I think that approach will change now. Now most of the insolvency professionals, as per the new judgment, will have to fight wherever possible to exclude or to deny the department of any benefit of any judgment which is erroneous and which needs to be fought off. Liquidation under IBC and interplay with GST law. So liquidation process shall be initiated under the following circumstances of section 33, when no resolution plan is submitted by resolution professional, when resolution plan is rejected. So in all these circumstances, the liquidation process can be started. And once the liquidator takes charge, he's required to intimate the jurisdictional GST commissioner within 30 days, and the next 3 months the commissioner shall assess the amount and notify to the liquidator, and the liquidator then also asks for the claim for that amount. And so this is how this is done, and the claim can be taken under liquidation. So government authorities have been given 1 seat of the SCC. Maximum seats in the SCC are 11 and 1 seat is given to the government. SCC members are not having any powers except to observe the process. When SCC can direct the liquidator to do some act or not to do some act, but the liquidator can choose to honor that honor that requirement or not do the required or not do the sought action after recording the reasons. Pending assessments during CIRP and during liquidation process, the pending assessments or other proceedings would be revived, and all those would be done. No enforcement can be done to recover dues. Claims would be filed by the government authorities before the liquidator after completion of the proceedings, and the due of government authorities would be paid as per the priority under section 53 of the code. So again, the question now is that in case the GST authorities, other authorities have a priority with respect to first charge on various properties, then till the time their assessments are closed, their demand is finalized by various appellant authorities, tribunals, maybe the distribution would be very difficult. We also understand that GST is required to be paid on capital goods that are sold under liquidation. This is the practice that we have been following, and also we believe that input credit, if any, taken for the CIRP cost or other costs incurred by the company can also be taken as an input credit against this sale. So the sale of plant and machinery would normally require a GST outgo. Sale of on this other side, sale of land and building would often not require any GST outgo unless and until it is a property which is under construction and sold maybe by an entity which is under real estate, which is real estate activity. As we see here, and also as advanced ruling under Rajashri Foods Limited has decreed, GST on sale of business or part as a going concern is not considered as a supply under the GST law, and therefore any sale of the business under liquidation as a going concern does not attract GST. Also, with respect to under CIRP, when companies change hands or when a CD comes in or when restructuring happens, there is no GST which is applicable on that transfer of shares or transfer of ownership, effective transfer of ownership. So special procedures under Section 148, let us spend a quick time on this. So under Section 148 of the CGST Act, special procedures can be followed and the government can notify these special procedures with regard to registration, furnishing of return, payment of taxes and administration. And the special procedures now mention dealing of dues under GST for pre-CIRP period, liability of IRP/RP to file returns of pre-CIRP period, requirement of new registration to be taken by the CD during CIRP period, and filing of first return after the registration is taken by the RP after he is appointed under the CIRP period. So availing input credit while availing the first return, that is something that is provided for. So essentially this new procedure came in on 21st March 2020, 23rd March 2020, and 6th May 2020. These are all notifications and relevant circulars, which are very, very important for all RPs so that they can comply with the GST requirements. The law is very clear that wherever GSTR 3Bs are pending for the period up to the CRP date, the RP is required to apply for a fresh registration within 30 days of his becoming an RP. And once he applies and becomes and is able to get access to a fresh GST registration, he is supposed to then file the first return for the period starting from the CRP date till the date of registration as part of his first GST return. So he's supposed to start paying taxes or GST on any transactions that have happened after the CRP date till the date of registration. And he is not supposed to pay any GST for the time which is belonging to pre-CRP period. Now, one of the questions and one of the concerns that comes out here is that say 2 months or 3 months of GST returns are pending for pre-CRP period, and the customers of the CD are saying that we are not getting input credit of this GST, you are requested to pay this GST. So our understanding and practical understanding on how that would end up what will end up happening is that the customers may not be paying for the GST on the invoices when the debtor recovery is done from them for the past supplies made by the company, and they would only pay the GST from the CRP date for going forward after the CRP date. So this is how they will perhaps act and ensure that the going concern remains for the company, because any customer who does not get GST input would always be trying to say that and claim that this GST was supposed to be paid and has not been paid. So new registration within 30 days, we have talked about this. Should GST registration of the corporate debtor be cancelled? So, so CBC has said that CRP has been initiated. Wherever CRP has been initiated, GST registration should not be cancelled. It can be suspended if it is already if it is already cancelled, then cancellation may be revoked. Then new registration taken by CD during the CRP period. So the CD, so sorry, CD who is undergoing CRP is to be treated as a distinct person. So that is how this works. I think only a few slides left. Just a second. So this is 30 days. I think we all understand that. Fresh registration is required to comply with GST regulations. We have talked about this. New registration would not be required in case all the 3Bs, all the ones have been filed in time prior to the CRP period. So again, RP change would not have any implication. RP change, the new RP can continue the continue the old registration taken by the IRP. So I think that's about it. And we have also talked about the input tax credit by the customers. Any refund which is payable to the RP for any amount, any tax payable under the old registration is also available to the RP. We have already discussed GST dues for the period prior to the insolvency commencement date. Moratorium will start, no coercive action. GST department will file a claim. Any assessments, any appeals pending will continue at the choice of the CD. So there is a new procedure that has been set within the CBITC, that is the Central Board of Indirect Taxes and Customs, where they have now a centralized system for IBBI to share information of CDs which are entering insolvency, and for the GST department to ensure that the GST, the various the department which is handling the which is in charge of the assessee is filing their claims and not acting in an irresponsible way or not following the circulars or the notifications.
I think we can skip few of these slides and just go to the NCLT orders.
So you can take these orders, Nitin, and
Yeah,
we are already crossed 2, so maybe we can just wrap these up quickly in
very
5
quickly.
minutes
Yeah.
with talking about the essence of these judgments.
So we'll talk of this judgment, which was there.
Yeah.
Bijoy Prabhakaran versus Memorial Hospital, previous hospital versus state. So in this judgment, the state officer submitted a claim of 28 crores, and as we were saying, the RP revised the claim to 1 crore. So the party was aggrieved, and they put an application in double A under section 65. The double A said that to file an appeal to the Joint Commissioner State Sales Tax Department for reassessment of the GST amount. So the judgment is very clear. So then later, the RP, next slide, the RP went to NCLAT. So then, so appeal before the, so whether the RP, so there's a question over here is directed the SGCD as directed by the order as to whether the RP has the authority under Regulation 13 to file the appeal, and whether the judgment, decree, or order, if passed by the appellate authority under CGST pursuant to filing, shall be binding on the corporate debtor, whether the requirement of a pre-deposit. So we'll just go to the next slide, please. Also, the facts of the case, and just go to the next slide. So they went to the NCLAT whether the RP has the authority to assess a claim like this, and whether the RP has the authority to file to the department to reassess these cases. So the NCLAT was very clear over here, and it said that the exercise of the revision of the GST order was beyond the jurisdiction of the IRP-RP. The IRP-RP was not having the uh, 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 adjudicatory authority given by the GST Act. Regulation 14 of the CIRP regulation only authorizes the IRP-RP to exercise power where the claim is not precise due to contingency or other reasons. So the RP in no manner can adjudicate a claim and of the GST department or any such matter. His role is very clear. His role is to verify the claim, collate the claim, verify the claim, and admit the claim. He cannot adjudicate the claim. Let's go to the next one. So this is an order by NCLT Chennai, where the NCLT observed that the GST portal was blocked, barring the corporate debtor from generating any bills. So, in this, the NCLT Chennai said that, given that the corporate insolvency started, the GST department can make a claim to the resolution professional against a corporate debtor as per provisions of IBC. Next slide. And allow the GST portal and open the GST portal and give access to the GST portal so that the filings can be done. Right. So this is another judgment by NCLT Bombay, which says that in the case of compromises and arrangements and amalgamations, it said that if NCLT, if there is no response from the tribunal of the GST within 30 days from the date of receipt of the notice, it shall be presumed that the GST has no objection to the proposed compromise arrangements or amalgamation in this case, right?
Right.
So you want me to continue?
Yeah. I think we can just wrap up these judgments and
Okay,
talk
and
about how
then
these.
this is condoning a delay. In this case, the GST department filed a claim after 452 days, and NCLT
It was a
conduct bench,
COVID
COVID
related
related,
grant
correct.
of delayed claim that
They
can be
they
taken up.
allowed,
Yeah.
inclined to allow this appeal and condoned the delay of 450.
So this is the next one where again they talk about payment of GST amount. So here this is a surface related matter where they ask the buyer to pay directly the GST on the purchase of assets, SBI, and that was then held that NCLT held that if the government is getting the taxes, that is good enough. It doesn't matter in case SBI has paid that tax or the buyer has paid that tax. This is again Rajashri, which we have already talked about the advance ruling, where it is that in case of going concern, businesses, tax is not payable.
Right.
Debt is NCLAT observations in this RMS employees case, and the question of asking for a waiver does not arise for the resolution applicant to decide how much to be paid to central government or state government against operational debt. So under section 53, so all these things, the waiver is something that future waiver can't happen. And for the past dues, of course, the resolution applicant has to state how much he wants to pay. Now, the big question is that what is this amount that will be payable to secured operational government creditors, government authorities in the event of liquidation? So that's our presentation. Thank you so much. And sorry for like passing 10 minutes extra. A few questions that have come in the meantime. What is the position where CD has shut down the business and has been placed under liquidation prior to the circular? So where the liquidation has already started, a liquidator is required, in our opinion, to obtain a GST registration only if there are any tangible assets which are required to be sold. In case there are no intangible assets to be sold, GST liability cannot arise, and therefore a GST registration perhaps is not required. What would be effect of ongoing liquidation cases of the SC judgment? A question from Yoginder Singhal-ji. Yes, there will be some questioning on what is the amount payable to the secured operational creditors, which are government authorities now. So there will be, I think we need to wait for a little more clarity to come in on what will be the what will be the implication on GST law, how the other tax authorities will enforce their first charge if that is upheld by maybe a review in the Supreme Court, because this will change the entire lending mechanism in the country. It is very, very difficult to say that every bank, every financial creditor which has given any kind of secured lending they all have a very, very high interest that if the government has the first charge, then their first charge gets diluted. So secured lending is endangered with perhaps this judgment. So let's see how this judgment is, how what action is taken by the government or through a review mechanism with respect to this judgment. ICD July month, they have been, we have a comment, they have been filing the GST return till June. ICD is July, and they had been filing GST returns till June, hence did not apply for new registration. However, CD is not cooperating and have filed under have filed section 19(2). So in this situation, the getting access to the GST portal as an insolvency professional through the jurisdictional AO is what is recommended in the circular, sir. So you can always try doing that. Ask the jurisdictional AO to give you the rights to access the GST portal. It will also perhaps assist you in getting cooperation from the CD. Thanks for there is a balance in cash ledger in GST, cash ledger of CD pre-CRP. Then whether IRP can avail such cash credit. So it totally depends. The cash credit which is available in the pre-CRP period, if that is a mistake and that is a refundable amount that can be taken, I don't think there is any possibility of transferring that cash credit from one GST registration number to the other. However, that can always be applied for a refund. So if there is any balance in the cash ledger of any GST registered entity, that entity can claim a refund of that cash ledger, subject to the idea that there are no demands against the CD. So that is how we understand you can perhaps get this money back as long as you don't have any demands pending. So I believe we have tried to take maximum possible questions. We have exceeded our time by 10 minutes. Thank you so much. Thank you, Nitinji, and thank you everyone
Thank you,
who was
Ankit.
part
Thank
of
you.
this session. And this was a very, very important session. And we will continue this learning system next week also, and come out with another topic which is most important based on the various changes that keep happening in this insolvency space, a fluid space where constant changes keep happening. Thank you so much.
Thank you, everyone. I think we've tried to explain as much as possible of this Supreme Court judgment, and hopefully we've been able to clarify some portions of it. Thank you. Thank you for your patience listening. Appreciate it. Thank you.